News Radio 600 Kogo, I'm Sully. San Diego Business Weekend is on the air. Great to have you along today. Looking forward to speaking to Christina Gustin from UBS Financial, RKG Wealth Management. Anne Marbarger, the CEO of Padres Pedal the Cause, is going to be with us today to talk about that fantastic charity. Phillip Molnar from the UT and my good friend Troy Hazard, keynote speaker, business pundit, author, all coming up on your San Diego Business Weekend. Wow. So I wanted to take a second because this week, as you heard me talk on San Diego Morning News with Ted and LaDonna, that we celebrated, I beg your pardon, we didn't celebrate. We recognized the 18th anniversary of 9/11. And it was significant for a number of reasons. One of which was, if you looked at where we were on 9/11, 2001 in the market, it was really an interesting time when you think in terms of what was going on Wall Street. The Dow Jones Industrial Average closed at 9,600 on the day before, on September 10th, Monday morning, or Monday afternoon. The NASDAQ was at 2,500-ish, and the S&P traded at 1,092 that day. To prevent a stock market meltdown, the New York Stock Exchange and the NASDAQ did not open for trading Tuesday morning, September 11th, because obviously this happened pre-market. And anticipating that market chaos and anticipating panic selling and anticipating a disastrous loss of value in the wake of these horrible terrorist attacks, the New York Stock Exchange and the NASDAQ remained closed until, get this, September 17th. Market was closed for 7 days. The longest shutdown since 1933. And moreover, if you think in terms of this, many trading houses, many brokerages, other financial firms had offices in the World Trade Center. And they were unable to function in the wake of this tragic loss. Many of them, Cantor Fitzgerald, for example, lost an entire organization, never to be found again, with the collapse of both towers. On the first day of trading after 9/11, the market fell 684 points. That represented a 7.1% decline. And that set the record for the biggest single loss in exchange history for one trading day at that time. Now, if you consider the fact that the Dow is currently trading in the 27,000 range, all right, that would be, if you think in terms of that's like a 2,300 point loss that day, if put it in today's terms, lots. Major stock sell-offs hit one industry the hardest, and that was the airline and insurance sectors when trading resumed. But at the close of trading for the week that Friday when the markets reopened, biggest losses in New York Stock Exchange history since the Great Depression. Dow Jones down 1,370 points at the time. That was a 14% loss. Could you imagine a 3,000 point loss in 1 week for the Dow? Because that's what it would look like in today's terms. The Standard & Poor's lost 11.6%. And in today's terms, that would be close to 400 point loss on the S&P. You're talking about $1.4 trillion was lost in those 5 days of trading. And that, by the way, I don't think can be categorized into a fear and greed category, because I'm certain fear is there, but that was obviously the most significant event in most of our lifetimes, in American history for that matter. And that was a fundamental cause for the market to do what it's doing. So I wanted to take a little bit of time just because I had a lot of people asking me, sort of about what was going on with the market at that time. And I find it really interesting that if you sort of spend time looking through history on that, it'll tell you just how far we've come. Because I always know we always go back to the Great Recession, right? We always go back to that chart in 2007 where the market was, crashed. But if you really think about it, this is where we should be looking. We should be looking back to 2001. And that's a longer time frame. But if the market came back after 2001 with a vengeance and then saw a blip again in 2007, 8, and 9 and came back again, obviously this is a good argument for your money being in equities, right? Christina Gustin is with UBS Financial, RKG Wealth Management. Christina, I think that's a good analogy, right? I mean, I can't think of two tougher times for this country other than December 11, 2001, and of course, us going through what we call the Great Recession.
Yeah, good morning. Thanks for having me. Those were very dark days, and I think the picture you painted is a good one. And also, you look at the chart and the recovery after both of those events it's just stunning, right? I mean, it's the power of our economy here in the greatest country on earth.
Yeah, and I think if when you're talking to, and I always ask you these things because you really are at the tip of the spear when you're talking to your clients, because your clients are the ones you have to talk, off a wedge, away from the cliff when things are scary. And things aren't crazy scary right now on Wall Street. And we certainly have a U.S.-China trade deal that's uncertain. But on the other side of the fence, we're at maximum employment. We got low interest rates. You got retailers that are reporting fantastic earnings. There's also a good story here, though, that you need to have your money at risk. Because had you left your money out after those, what some people call black swan events, you're missing out on an opportunity here, and I think that's a big lesson to be learned here for those people that are still tepid about investing, specifically in the millennial category.
Yeah, no, it's a really good point, and I think there aren't that many things in life that we have a really long-term perspective about anymore. Everything's so immediate for us now, but with investing, certainly it is not only a long-term exercise, but that's how we make decisions. How have certain investments done over, economic cycles, which can be 10 years long? What is the performance of a specific investment been over the last 1, 3, 5, 10 plus years? I mean, that's how we make, I think, really smart decisions. And if you think about over time how people have grown wealth using investment portfolios, I think it's one of the best opportunities out there.
I think so, too. Talk about, I first met you, and people don't know this, Christina Gustin was a guest on the Big Biz Show, our national TV show, and she was introduced to us as a financial professional, but it was also because you had an affinity and a knowledge for millennials. And considering in the next 6 years, 75% of our customers and 75% of our employees are going to be in that millennial category, or Gen X or millennial, it brought up something I think at UBS and RKG Wealth Management where you thought we better start paying attention to this. Give us an overview of the millennial and their taste in investing, because for a while there, they were, and I say they, millennials, were loath to invest because they lived through what their parents lived through during the Great Recession. You need to think in terms of the fact that over the next 5 years, the purchasing powers of millennials worldwide is going to go to $1.4 trillion. As they get older, you're going to be faced with investment stuff. What's going on now in that cluster?
So a lot of millennials that come to me have a very black and white image of investing, right? Either, the Great Recession happened, it's going to happen again tomorrow. I don't want to put my money at risk because I don't want to lose everything. Or, I show them a chart of a growth stock or a growth mutual fund over the last 5 years.
Sure.
That's returned, 20, 30%, some insane number, and they want to, put it all on black, right?
Sure.
Like invest everything in the most aggressive passive possible investment. So the education process is looking at long-term returns. It's talking about why you should diversify a portfolio and how portfolios of blended investments will perform during both up and down markets. I want to get them into a portfolio where through the good and the bad, this thing is going to perform, and really break down for them what that means and which asset classes you need. And I work with a lot of women investors also who are coming to me after a death in the family or a divorce or an inheritance or some major life change, and they need to be educated because they've never handled investments before. So that's a lot of what I do is teaching.
Are there challenges nascent to being a female investor versus a male? I mean, let's say you have a male divorcee in his 40s and a female divorcee in their 40s. Are there different sort of nascent challenges and hills to climb there, or is it just a function of their appetite for risk?
So I could talk about this for hours. It's one of my favorite topics. Women, we say, have a different financial lifespan than men. Women tend to take, if they're working, they tend to take more career pauses to be caretakers for children, aging parents, other family members. Often they'll work longer and often they'll live longer. So they have to provide for themselves in a different way than other investors might. So yeah, there's a lot of different considerations there.
Hey, Christina, stay with me for 1 second. I'm going to keep you over this time because I've got a couple of questions about market conditions and about really the fact that there's Donald Trump came out and is putting his finger in the chest of the Fed, saying there needs to be an interest rate cut and that they need to refinance the debt, which it's a head scratcher for me. But I do want to talk about the metrics of the economy and whether we need an interest rate cut. I think we should talk about that. San Diego Business Weekend. I'm Sully. It's News Radio 600 Kogo. Christina Gustin is going to shed more wisdom on what we got going in the market.
What's this cold reaction?
Hey there, welcome to your weekend, News Radio 600 Kogo. It is San Diego Business Weekend, and I'm Sully. Coming up on the program, Anne Marbarger with Padres Pedal the Cause, Phillip Molnar with the Union-Tribune, and Troy Hazard, keynote speaker and noted financial author, going to be joining us. We've been talking to Christina Gustin. Christina Gustin is our regular. She kicks us off every week, and I'm so glad to have her and her knowledge and her trusted financial advice because, as her website says, it is more important today than ever. She's with UBS and RKG Wealth Management. She is a strategic advisor, and by the way, they do not sponsor the program, but I would argue if you do not have a financial advisor, and I have referred a number of friends to her. And every one of them has bought me dinner as a result of it. So I think you should try to get a hold of her, Christina Gustin. If you need her number, just ping me through the Kogo website or send me an email through the bigbizshow.com website. You catch me every morning here on the Morning News with Ted and LaDonna, as well as Good Morning San Diego on KUSI. Christina, I have said for a number of weeks that we are at maximum employment. We are at 2.5% interest rates. And you have retailers like Walmart, Target, Dick's Sporting Goods, Nordstrom. I think I've covered every category of consumer spending, from the wealthy down to the lower echelon income earners. All of those metrics are in place, and of course, the reason I'm bringing up retailers because retail doesn't report great earnings unless we're spending money, and 70% of our economy is based upon consumer spending. In your opinion, do we need stimulus? Do we need a rate cut right now? I know Donald Trump's pushing for one. There's some other politicians pushing for one. There's political economic analysts saying that we need one. In your opinion, do you think we need a rate cut to stimulate the economy? Or where do you stand on it?
So as a private citizen, I personally think, like you just said, I think the numbers are pretty strong right now. The fundamentals are really sound. There's a lot of fear and kind of brewing negative sentiment out there that's kind of keeping a lid on the equity markets right now. Rates are incredibly low, so the cuts that have already happened are working. They're stimulating the economy. Last week we had a record issuance of investment-grade corporate debt. So these companies are, issuing these debt at these incredibly low rates, which is stimulative to the economy. So they're going to go spend that money. But UBS is our main research team is calling for a 10-year Treasury around 1.5 by the end of this year. They're definitely expecting at least one cut now and possibly 4 more by the end of next year. And our global research team has lowered their forecast to 1% for the end of 2019, which shocks me because I just don't think things are that bad. But I could be wrong. We'll see. We're certainly going to find out.
Well, I think the other piece of this too, don't you have to? We have to think in terms of this, is that we're just top heavy too, are we not?
We definitely are.
We've been doing this for a while.
Go ahead.
We've been doing this. We've been going up for a long time. What goes up must come down. Could it be as simple as that?
It's right, and I think, our yields are being bolstered by, we have all this really negative debt and low-yielding debt all over the world now, so people are rushing into the U.S. markets to buy our treasuries, which has been kind of, pushing the debt prices up and yields down, which is how that bond math works. But, we're still seeing cuts coming along. I'm shocked that President Trump is rallying so hard to go to zero, because I don't think we even fully understand the impact that would have on our economy.
Yeah, and that's not a political comment. That's just, I agree with you 100%. Why are we pushing for stimulus that we could use later, by the way, when we really need it? Why would we do that? And I think that's an interesting sort of piece of it. Leading indicators, for me, the open air indicators, look, it's tough to get a reservation these days. People are out there spending money. It's plane airfares going up because flights are full and so on and so forth. Everything seems to be singing along. What is the watchword with UBS right now? Are you guys accumulating? Are you looking at long-term value? What right now? What is the sentiment as far as the investment theme right now, or is it one of those things where you kind of have to pivot as news events happen?
There's not a lot of conviction for the bulls or the bears right now. We're kind of muddling along. Everyone's asking, is the U.S. recession around the corner? That's the title of our House View Weekly this week. I'm looking at a recession dashboard of all these different indicators, like you mentioned. And, things aren't all perfect. Manufacturing slowed down a little bit, but I don't see a lot of huge cracks in the pavement. It's just, we've got some yellow lights right now, but not red. It's not red. I don't think things are that bad. I'm not worried.
Well, there you go. Christina, thank you so much. Christina Gustin, RKG Wealth Management, UBS Financial. And, of course, if you want to get a hold of her, 619-557-4758, or just send me an email here at kogo.com, keyword Sully, and then you can, I'll put the two of you in touch. But, again, they don't sponsor the program. She's just a smart person, and I love to have her along. And frankly, she adds a lot to the program. So coming up just 1 second here, we're going to talk to Anne Marbarger with Padres Pedal the Cause. And I'll tell you, it's a fantastic charity. You hear me talk about a number of charities here on the program, like Challenge Athletes Foundation, Wounded Warrior Project, Operation Rebound. PedalTheCause.org is their website. And I'll tell you, it is a pleasure to be able to help her out and to give them some exposure. Prior to doing that, though, I want to bring up something real quick here that I talked about on Kogo this week with Ted and LaDonna, and that's the fact that virtual currency has gone mainstream. We're going to have an entire show in 2 weeks about Bitcoin, the blockchain, and we're going to try to sort of break that down for you so you understand, because recently AT&T announced to its customers that they can use Bitcoin to pay their phone bills, and Microsoft and Expedia and Overstock.com are also accepting Bitcoin for payment these days. So again, virtual currency has gone mainstream, and we want to talk about that, including what tax implications that could possibly surprise you, of how to understand it, how to deal with an online digital currency exchange, and understanding, really the where it's going, because I think you need to take it seriously at this point. Now, am I suggesting that you need to go out there and invest in Bitcoin? Probably not yet. I think there's not enough safety in it yet. There's not enough regulatory bodies that are going to make me happy yet. But at the end of the day, it's something we need to talk about. Padres Pedal the Cause, September 28th, 29th. I say September 28th, 29th, 2019. The long story short, that's the pedalthecause.org. But the Padres Pedal is something completely different. The reason I'm bringing that up, because you guys all emailed me when I was teasing this story. Padres Pedal is a different thing than pedalthecause.org, and that's why I got Anne Marbarger on the air. And, the minute I bring you up, everybody wants to be involved, but they all thought it was coming up in 2 weeks. And I said, okay, wait, I got to bring Anne on the air to fix it because there's two different things going on here. So first of all, let's clear the air. Padres Pedal is not this month. It's in November, correct?
Correct. Thank goodness it's not this month. We still have about 9 weeks to go. Our event, Padres Pedal the Cause at Petco Park, is Saturday, November 16th. What the listeners were probably asking about is Pedal the Cause St. Louis, which is coming up at the end of September. That is where our founder started Pedal the Cause. So we now happen in 2 cities, but the one in San Diego, Sully, that we always talk about is happening in November. And we are well on our way to be our biggest year fundraising for cancer this year.
Well, what's interesting is, first of all, you can ride, you can spin, you can walk. It's November 16th, 2019. And the reason, once again, I want to put people to the right website, because when I teased it on Good Morning Good Morning San Diego on KUSI, as well as the KUSI or Kogo Morning News, is I said gopedal.org, and I got a ton of emails saying, what is the Pedal the Cause? It's the same outcome, but we're talking about San Diego here. So talk about that. You've got a new destination here in San Diego. The ride's different this year a little bit, and there's a lot of things that are going on. Talk about the entire organization, because you guys are a community of cancer fighters. And I've had you on the air on the national show a number of times. And I will tell you, it's interesting to hear sort of what you're doing, because it's not the standard sort of charity. You guys are actually funding research, and you have a third-party organization that picks the research that your money is going to. Talk about that whole thing.
Yeah, so our whole mission is to accelerate cures for cancer by funding collaborative research that takes place in San Diego. So it's something, the outcomes of this research and the enhanced detection mechanisms and the better treatments and care options will certainly benefit everyone in the country, around the world. But the research that we fund takes place in San Diego. A lot of people don't know that San Diego is one of 2 locations that has 3 NCI cancer research institutions. So what that means is it's just 3 very closely located top caliber research institutions, and those are Moore's Cancer Center at UC San Diego Health, the Salk Institute, and Sanford Burnham Prebys. So we give all the money that we raise to those 3 institutions and Rady Children's Hospital. And Sully, you mentioned that we have an independent council that helps actually apply that funding to specific grants, and that's absolutely true. We have a council of representatives from each of those 4 beneficiaries that runs a RFA process. They collect applications and screen those applications to award funding to the most promising kind of high-risk, high-reward translational research projects. So over the last 6 years, we've raised and donated over $10 million, and that has funded 54 research projects and 5 clinical trials.
So real quickly, Anne, because you're going to be on a number of times here on Kogo and here on San Diego Business Weekend, as well as some other outlets. Real quickly, how do people get involved? They go to gopedal.org and they register, and they can ride, they can run, walk, or they can spin. Correct? And there's a fundraising minimum of $250 if you spin or walk, and I think there's a fundraising minimum if you ride. Talk about that real quickly.
Yeah, so anyone who wants to participate can join us in San Diego. It's Saturday, November 16th. There are 4 cycling options. They are all rides. They're not competitive races. The shortest distance is 25 miles. We have 55, 88, and 100 miles. Then we also have a family-friendly 5K walk-run. You can run it as fast as you can. You can walk and push a stroller. We have spin classes on the field with a live DJ and live spin instructors. And we also have a kids challenge. So anyone who wants to attend in person, Sully's band is going to play afterwards. It's a great celebration on center field. But if you can't be there and you still want to support, we welcome donations. And there's a green donate button on the top of our webpage, and you can make a general donation if you're not able to participate this year.
There you go. Anne Marbarger, CEO, Padres Pedal the Cause. By the way, go to the right website, since y'all emailed me, gopedal.org. There you go. Coming up, Phil Molnar, San Diego Union-Tribune, business reporter, one of the smartest guys I've ever met. He's going to be joining us here. It is San Diego Business Weekend. I'm Sully, News Radio 600 Kogo. Looking forward to talking to Phil in just a second here. Also, coming up, Troy Hazard, who wrote the book Future Proofing Your Business. And if you want to send me an email, go to kogo.com, keyword Sully. I'll tell you all about it. Hey, News Radio 600 Kogo, San Diego Business Weekend. Hope you're enjoying your weekend. Thanks again to Christina Gustin with UBS Financial and RBS Wealth just call it UBS Financial. RKG Wealth Management, sorry. And Anne Marbarger, Padres Pedal the Cause. Out there and raise money for cancer research. So I had a chance to meet Phil Molnar for the first time in person. Of course, I read his columns daily, it seems, in the San Diego Union-Tribune. He's also a contributor here on News Radio 600 Kogo on the San Diego Morning News with Ted and LaDonna and myself and the rest of the crew. And it was fantastic to meet with him last week, and I realized just what a smart guy he is. And I didn't realize he was such a specialist in real estate as well as all things business, but he agreed to come by for a few minutes again today. Philip, how are you, sir? Good to talk to you, man.
Dude, I'm doing great. Thank you so much. You're making me blush over here.
Well, listen, and I need to full disclosure. All these people think I'm really smart and I'm a pundit and stuff. I got to tell you, my research is basically the encyclopedia of Phillip Molnar. So let's face it. When you hear,
thank you so much.
Well, it's true though.
That's not true.
Well, no, at least, but at least when you're hearing me regurgitate what you've written, at least I give you credit on the air. I don't.
Yeah,
I don't just blatantly steal it.
It somehow sounds more professional.
Oh, I don't know about that. So I want to talk about the story that I talked about Monday of this week that you wrote about. I think it was either Sunday or Monday, about the fact that Zillow is launching a new home buying program. Break that down for us, Philip, because that's really interesting.
Yeah, this has a lot of real estate agents up in arms and a lot of people really curious. And I've even had phone calls and emails all day today, so I'll try and break it down. So Zillow is essentially changing one of it's basically its core business model, which is pretty much selling ads to real estate agents on its website. Instead, Zillow is starting something called Zillow Offers, where they will give you an instant offer on your home, basically. The deal is you go online to Zillow Offers, write about your home, say how old it is, what's the location, any work you've done to the home, any work that needs to be done to the home. And Zillow will give you, if they want your house, you fill their criteria for their algorithm, they will give you a cash offer, which you can accept within 5 to 90 days.
So this is like the CarMax for real estate. This is the CarMax for real estate, it sounds like.
Yeah. I mean, it's like, well, yeah, it's not too different from things we've seen in the past. But the interesting thing about it is that they will charge a 7.5% interest rate on your home, whatever the sale price.
No, you mean like a convenience? They're calling it a convenience fee. I saw you wrote. So as opposed to a commission, they're calling it a convenience fee. Now, why would that be a convenience fee?
Well, Zillow says first there's the speed of it. You don't have to sit through open houses and all this other stuff. But part of that fee includes repairs to the home.
Wow.
Repairs, cleaning, deep cleaning of the place. and just in general, handling all the listing, and you don't have to go through the open house and all that kind of stuff. With a listing agent, sometimes it could be low end 3% to you can find yourself in a higher situation. So in just about any way you look at it, this is going to cost you more money than a real estate agent. But the interesting thing about it, and that nobody really knows, and it's kind of hard to see unless they're in San Diego for a while, is it going to be, in the end, about the same amount that you might spend on repairs and cleaning your place anyways? I kind of doubt it. I mean, if we're talking about a median-priced home in San Diego County, an extra 2% that you're paying not to a realtor could be like around $12,000. So it's sort of it's strange. It's one of those things that gets people talking, because there are situations where a sale doesn't go that well, where you end up being on the market for months and months, and you're making repairs and doing everything you can. And
this could actually be a good.
It's better to do it this way. I don't know.
I think under the right circumstances, this could be a very good thing for some people. I mean, that it's, if you answer a few questions and figure out the condition of your home, and they give you what's called a no obligation offer. I can't see the downside in actually just talking about it. The other thing I want to talk about is AB 1482. That is a possible statewide rent cap bill that was voted on, and it cleared the Senate with a 25-10 vote after about 30 minutes of debate. So AB Assembly Bill 1482 would bar landlords from hiking rents more than 5% plus local inflation in 1 year in the cities that don't already have rent control laws. Talk about how that affects us in the city of San Diego.
Well, it'd be interesting, because in the city of San Diego, we have no rent control, which is very rare for San Diego cities, because you think of the bigger places in our state, San Francisco, Los Angeles, they all have a pretty weak form of rent control, I'd argue, that at least has some chance of quelling rent increases in some cases.
Sure.
So the fact that San Diego has never had any type of rent control is pretty remarkable. And even San Diego County, for as big as our county is, the fifth largest in America, the fact that none of our cities even have any form of rent control is pretty remarkable. And so this bill, if it passes, it has to go to the Assembly this week. It has to be re-voted on in the Assembly this week. And then if it passes, it's going to go to the governor's desk, and he's pretty much indicated he's going to sign it. None of this is a guarantee, but one of the amazing things that could happen is here in San Diego County, we will see a big change for anybody that's renting or the big landlords in town. I mean, it's going to be a big change for our real estate market.
I think so too. Talk about in the city of San Diego, there's still a big push with respect to what's going on downtown with the convention center, and in terms of economic impact. We lost a football team here in this town, Phillip, which I argued was not about football. It was about those 3-hour commercials on Sunday where some guy in Minnesota was watching, his team play in 70-degree weather, and it brought tourism to San Diego. So we don't have a football team anymore. We got KABOO this weekend, and KABOO obviously is if you look at the direct spending and economic impact reports, is doing great for the county of San Diego. You've got the Delmore Thoroughbred Club. we've got of course tourism. Do we need, in your opinion, and I'm not asking you to be political here, but a lot of people are still talking about bringing an NFL team back to San Diego because we need the tourism. Is there, what is the one thing you think we need to drive tourism to San Diego? Because the way I look at it, yes, as a lifelong San Diegan, I'm upset that the Chargers aren't here. I know that we lost some economic impact, but boy, didn't we replace it with the craft brew industry and so on and so forth? I mean, I think the open air indicators say we're doing pretty good in San Diego right now.
Yeah, our economy is doing really great. And another thing to consider with the Chargers leaving is the city was losing so much money on Qualcomm Stadium every year that the economic impact of the Chargers was so limited to that. I even heard an economist one time trying to break down the numbers and made the argument that Comic-Con in 4 days made more money for the city than the Chargers did all year.
That's true. And that, I guess that brings the point of an expanded contiguous convention center that has pillarless space, because imagine bringing a consumer electronics show who's been very overt about wanting to move out of Las Vegas because it's sort of cumbersome with the multiple sites there, or a real international auto show like we used to have in San Diego, or even another Comic-Con per year. Does it make sense for us to start thinking in terms of civic assets that bring tourism here like that? Because, boy, conventions mean business, means economic impact, means hotel rooms, TOT tax, which is a third of our general fund.
Right.
So I can't see a downside to start banging the drum for things like that.
Well, I guess one of the arguments I've heard two things about the convention center, but one of the things is that it would create more jobs at the convention center and in tourism. But the problem is those jobs that it creates are low-paying jobs.
Sure.
For people that would not be able to afford to live here, arguably. So even if you're creating more hotels, you're creating a bigger convention center, those necessarily aren't the type of jobs that we really, I guess, want in an argument sort of way, because when we look up at like Sorrento Valley, where the biotech industry is booming and technology and all that other kind of stuff, that's where some economists and maybe some business leaders might want to argue, hey, look, we don't need to be fighting about extending this convention center, even though it's so great, and Comic-Con is growing and it's fantastic. What we really need to worry about is what we really should be spending our time on is Sorrento Valley and the incredible wealth that brings to the region. Yeah. Now, having said that, I did kind of I talked to an economist about this sort of idea, because I find that a really compelling argument. Like, forget about the convention.
Well, stay right there. Stay there for one second. I'm going to keep you, because that's an interesting topic, because the old adage says easier to keep a client than to get a new client. To Philip's point, why are we not spending more time on the areas in this town that are already ringing the cash register? We'll talk some more to Phillip Molnar from the UT, as well as Troy Hazard, business author, is going to join us in just a second. It's San Diego Business Weekend. I'm Sully, News Radio 600 KOGO.
What's this Corey?
News Radio 600 KOGO. Welcome to your weekend. It's San Diego Business Weekend. Coming up in just a second, Troy Hazard, noted business author and keynote speaker, author of the book Future Proofing Your Business, going to be joining us here in just a second. You can catch me every morning in the San Diego Morning News with Ted and LaDonna right here on News Radio 600 KOGO, also over on KUSI, on Good Morning San Diego, and the nationally syndicated television and radio broadcast of The Big Biz Show with Rusty Nails and I, bigbizshow.com. So great to have you along today. My new friend Phillip Molnar from the Union-Tribune is with us today, and we're talking about things that are going to exacerbate our economic growth in San Diego. And I think one of the issues that we've been talking about for a long time is contiguous convention center space, which I'm a big fan of personally, because I think it brings in some of the real conventions. It cements in the Comic-Con sort of story. But Phillip, you bring up a really great point in the fact that why not put some of the resources in some of the areas that are already sort of ringing the cash register? And you mentioned Sorrento Valley. Talk about that again, because I think that's really important, because we can't ignore the fact, because it's the same philosophy that they say in sales. It's easier to retain an existing client than to get a new client. It's sort of the same philosophy. And I think we need to sort of think about that for a minute. Talk about that for us, would you?
Yeah, definitely. There's an economist I really love at Harvard named Ed Glaser, and one of his big arguments is the federal government, when it gives money and it spends money, it shouldn't be putting money towards my hometown of Detroit, which is not producing a lot of good jobs and not producing a lot of wealth. It should instead be putting money towards like San Francisco, where it's just hemorrhaging with money and possibility and technology. So that's sort of a similar argument we could find in San Diego, at least among some economists and some business thinkers, even though they might not want to say it out loud, is in Sorrento Valley, the heart of our biotech scene, Google, Apple, they're all getting offices out there. That's the area that's really creating those high-profile jobs that are going to be able to afford living here in San Diego, and they create a lot of wealth for the region. So maybe we should focus there instead of, say, building a new convention center.
Yeah. So
now, on the flip,
if it ain't, the only if it ain't broke, don't fix it, right?
Yeah, but what I would say is, man, I love San Diego Comic-Con. That was one of my selling points for coming to San Diego. I've been there the last 4 years. It's incredible from a financial standpoint.
And it's teeming with economic activity. I mean, when you look at Petco Park during a Padre game, or you look at Comic-Con during the convention center during Comic-Con, it is teeming with economic activity. I mean, you can't deny that.
Oh, my God. Yeah, I know. And all the tourism dollars it brings in, and just this incredible there must be, you could probably chart it, but maybe consumer confidence, but there's something about the joy of having a place, joy of having the Padres, joy of having the comic convention, joy of having a football team that kind of just goes beyond the dollars and cents.
Yeah.
I think there's a really strong argument for letting the Chargers go because of how much Qualcomm Stadium was costing our city, and it was just not it was a bad enough financial thing that it's, in some ways, it's not bad they left, but you talked about maybe getting an NFL team, or I know the XFL is starting up. I mean, sometimes it's just so hard to calculate how important that is for people in a region when we're just talking about economics.
No, you're exactly right. Phillip, thank you so much, man. I can't wait to steal your wisdom again and again, and I appreciate everything you do for the San Diego Union-Tribune right here on News Radio 600 KOGO. Thanks so much, man. Have a terrific weekend. Enjoy the rest of your weekend here. I hope to make him a regular guest on San Diego Business Weekend. My good friend Troy Hazard is teed up. He is, of course, the author of the book Future Proofing Your Business and the Naked Entrepreneur. TroyHazard.com. He is an author. He's a TV host. He's a keynote speaker, and he's a business pundit, is what I call him. You know, he lived here in San Diego for a while when we first met, some 12, 13 years ago, and he ended up moving to South Florida, which escaped a number of taxes and a better outcome for he and his family. And when I say the word Florida, you can't help but think about this big, huge storm watch that just happened in this last week. And again, this wasn't his first rodeo, but of course, what does Troy do? Troy turns it into a business lesson for the rest of us. What's up, man? Great to talk to you, dude.
How you going, mate?
Good. So listen, you've been an entrepreneur for 30 years. You have forecasted business here on the Big Biz Show. You've been on KOGO a number of times. You know, your book, Future Proofing Your Business, is basically a disaster plan for small business. So, you know, I would have been disappointed had you not put the two together. Talk a little bit about your storm survival guide for future-proofing people's businesses for all the entrepreneurs listening in Southern California today.
Yeah, look, it was interesting watching everyone prepare for Dorian as it came up the coast. We were lucky we didn't get hit. It kind of sailed right by. But I did watch the community come together and prepare themselves with food and water and batten down the hatches. And it just reminded me that we're looking at a shift on the horizon in business, in the economy, in trade. And I wonder if we're prepared for that as business owners, because sometimes we forget. And particularly in a seasonal city like San Diego, where we rely on tourism, we rely on that influx of money coming into the city every now and then. If there is a shift in the economy, if there is a storm, are we ready for it? That's the question we've got to ask ourselves. Do we have a survival guide ready for it?
Well, and I think a piece of this thing is I talk about fear and greed all the time in the stock market, and you talk about looking at your business in not fear and greed, but truth and fear. Talk about that a little bit.
Well, exactly, because see, we can see these signs. We can see signs in the economy, signs in our city, signs in our suburbs that things are changing or shifting, and in particular in our industries, because we work there every single day. Don't ignore them. Stand in your truth. Look at the changes that are happening and try and find ways to prepare for that today, because it's inevitable. There will be a shift, there will be an impact, and if it's not coming from the economy, it will come from your sector or your city or your state or your county. Something will affect you, and if you're not prepared for it, it's going to hurt even more.
You know, the other piece of this thing that I want to talk about is the fact that you're good at spotting problems ahead. And that's what you call spotting an obstacle inside of an opportunity. Talk about that, because some people would call that pessimism. I think that's called good planning.
Well, yeah, it is. Unfortunately for me, the last economic shift we had in 2008 with the global financial crisis, we were ready for it. But the three before that, we were not, and they hurt us badly. So I had to learn my lessons the hard way. But coming into the last correction, we saw it coming. We watched the numbers. We looked at the environment we worked in, and we pretty much put everything into the bank and just waited for things to change. Because on the back end of that comes real opportunity. Business in distress, changes in economics, changes in industries. That's where you can dive in and really pick up on the upswing as the economy comes out the other side. But if you're not ready for it and prepared to jump right at that moment, at that precipice, you're probably going to miss it.
Well, let's talk about being ready for it, because I have to assume that cash has to be a piece of this, right? I mean, you've got to have enough dry powder, right?
Absolutely. And the worst time to ask for money is when you need it.
Yeah, right.
And think of this, your lender, your financier, your banker, whoever you've got money from over the last bunch of years, their shift is going to happen as well. Their loan ratios, their environment's going to shift, and they're going to want to put some of that pressure back on you. So if you are pretty extended on your overdraft, if you're extended on your mortgage, or you've got a lot of credit card debt, you've got to fix it right now, because going and asking for money in the middle of a shift is the worst time you can do it.
And that tends to happen with businesses. We're just talking about personal finance. We're talking about business finance as well. His name's Troy Hazard. Troy Hazard wrote the two books that you can see here on the set. If you're listening to me on the radio, of course, you can always, after the show, go to kogo.com, keyword Sully, and you can watch the TV version of the show. The Naked Entrepreneur and Future-Proofing Your Business, Troy Hazard, troyhazard.com. He's an author. He's a TV host. He's a keynote speaker. You talk for the last dozen years that I've known you about positioning, and positioning is everything. What does that mean exactly? Because I think a lot of people have a lot of opinions about that, but I think there's a real specific prescriptive nature when you say position yourself, because positioning is everything. Shed some light on that.
So we've got business owners all over the city that are used to accommodating their customers or clients in a particular way. They position their business in the eyes of their consumers to solve a problem of today. Now, when there's a shift in the economy or in the industry or their sector or the city, if they're not prepared to solve the new problem that their consumers have, they're probably going to miss out. Because if I've had an impact on my life as one of your customers or clients, I'm looking for ways to fix that. And if you don't continue to fix that for me, I'm going to find a new way to spend my money. So if you're a disposable income, or if you're maybe a service provider that is not a necessity for me, find a way to become one. Because when I've got financial pressure on me as one of your clients or customers, I'm going to be looking for a way to save my pennies as well, and that might mean cutting you out.
The piece of that goes along with positioning is a question that you've asked a number of times, and that is, do you have clarity of vision? I know you and your wife get together towards the end of the year in November or December and try to get clarity of vision for the next year coming up, and you take inventory of the last year. Talk a little bit about that, because this all comes down to avoiding an accident, does it not?
Absolutely. And so right now for us, we're already prepared for the next economic shift. We've been looking at it for the last couple of years. We've been preparing our businesses, our lives, our lifestyle, in readiness for a change, because doing it right at that precipice is too late. So our job now is to look for the next one. So we're starting to work from the other side of an economic correction as to what we need to do to pick up the opportunities, to look at what's next, and to find a way to carry ourselves through the next cycle of 7 to 10 years. Now that's hard. But if you get into a rhythm and a routine every year to do that little planning section and to create that vision, all of a sudden it becomes a heck of a lot easier.
Well, I'll tell you what, Troy, once again, dropping your wisdom on Southern California, and there he is walking down the beach. This is on a work day, by the way. But that's like a Monday morning, by the way. That's Troy that you're looking at on the screen. Future-proofing your business, Naked Entrepreneur. Thanks, buddy. Appreciate you coming on the air. Thanks again to Christina Gustin from UBS Financial, RKG Wealth Management. Also, Anne Marbarger from Padres Pedal the Cause, and Phillip Molnar from the San Diego Union-Tribune. Christiana is our director. Curtis Manovich, our assistant director. I'm Sully. Catch me every morning on the San Diego Morning News with Ted and LaDonna. Also over there on KUSI, Good Morning San Diego, and thebigbizshow.com. It's San Diego Business Weekend, News Radio 600 KOGO.